We're going to be looking at Australian dividend darlings.
Yes.
Companies that have been consistently paying dividends. So what have you got?
Well, I want to start by introducing the concept of the Dividend Aristocrats. Are you familiar with this concept?
I am. Companies that continuously increase dividends
Yeah.
year after year.
So specifically, like the technical definition is companies in America's S&P 500 that have raised dividends for 25 years or more.
Raised dividends for
Not
25 years or more.
even raised or kept steady.
But just flat out raised.
Raised
Wow.
dividends for 25 years or more. And if you fall out of the S&P 500 or you don't raise your dividend,
You're gone.
you're gone. How many companies in do you think fit that criteria?
In the States,
Well, the S&P 500 is the
S&P 500.
States, yeah.
8.
No, 67.
Oh, wow.
Yeah, I know. It's heaps. And there's, some really well-known companies. It's a lot of the quite boring companies. It's like the 3Ms of the world,
Yep.
and it's like Coke's in there and stuff like that. There are ETFs that buy these Dividend Aristocrats. So like track the Dividend Aristocrats. The index over the last 5 years has returned 43%, 44%. So not bad.
Year on year? Or
No,
total?
over the
Total.
5 years. Yeah. And so it got me wondering, is there an Australian version? And I'm calling these the Dividend Darlings rather than the
Okay.
Dividend Aristocrats. So what I did was I jumped onto Ticker and used their stock screener. And whenever anyone can jump onto Ticker, ticker.com/equitymates. The link will be in the show notes. But all I did was, rather than 25 years, I started with just 10 years.
Yeah.
And I just said, any company on the ASX, and then I did, has increased their dividend per share more than 0%
Yep.
for the last 10 financial years.
Yep.
How many companies, so not ASX 200, just total ASX, all 2,000 Aussie stocks, how many companies do you reckon fit that criteria?
10.
Pretty close, 12.
Okay.
Yeah. Then I changed the inputs to have raised or kept steady for the last.
Yes. Yeah. So not going backwards.
Yeah, not going backwards.
Yeah.
How many companies do you think fit that criteria?
So not going backwards, maybe 40.
Exactly 40.
Oh, nice.
Yeah. But I want to focus on the 12 because that's a lot easier to talk about on a
Yes.
podcast than the 40. Some of the companies that you would expect to be in here, like you would think like BHP, Rio, like they're the Dividend Darlings.
I know
the
two that
banks.
would be in there.
Name them.
Soul Pats.
Yes, Washington H. Soul Patterson.
And Brickworks.
Brickworks,
Yeah.
nailed it. That's 2 of the 12.
Yeah, that's all.
So in order of largest market cap to smallest market cap, Sonic Healthcare,
Okay.
Car Group, which is what car sales have changed their name to.
Okay.
Yeah. Soul Pats, as you mentioned, APA Group, one that's about to come off the board, Altium Limited. It's because it got bought out, so
Yep.
it's not going to be listed anymore. Charter Hall Group, the property developers, Technology One, Brickworks, you mentioned, Centuria, Arena REIT, and then 2 more, Nick Scali Furniture.
No way.
Yeah, and Fiducian Group. So that list was a little surprising to me.
Yeah, Nick Scali surprised me. I don't know why. It just doesn't feel like it fits in with those other... How long was this? Over 15 years?
No, 10 years. 10 years. So the Dividend Aristocrats in the US
25,
are 25,
yeah.
but after 10 years, I only had 12 stocks. So I figured let's leave it there. The Nick Scali story is a fascinating story. Like, look at
The share
price
I know.
over the last 10 years.
Yeah.
I mean, it's 10 bags since it listed.
Yeah.
But since 2014, it's gone from $2 to $15.
Yeah.
It's crazy.
Killed it.
Furniture.
Yeah.
So those are the 12 companies that I'm naming Australia's Dividend Darlings.
Okay.
The question then becomes, how has it performed as an
index.
cluster, as a group?
Yeah.
Do you want to have a guess? I did the last 10 years.
Over the last 10 years, those companies, probably 15% a year.
Okay, so I went on to ShareSite and I don't pay for it, so I could only put 10 of the 12 stocks in.
And let me guess, you chose the top 10 best
So
performers.
I took Nick Scali and Fiducian as the two smallest market cap companies got the flick.
Okay.
And of the 10 that I could put in ShareSite for free, the per annum return was 55% a year at compound average annual growth rate.
Wow. Obviously includes dividends.
Includes dividends. But then skewing that number was Altium. Altium went from like $2 over the last 10 years, went from like $2 to $65 a share.
Okay.
So then I did X Altium. So I flicked Altium out and put Nick Scali back in.
Yes.
And the numbers, as I look at them on ShareSite, 29% per annum return. And that's made up of 18% capital gain and 10% dividend
Solid.
yield. Yeah.
Solid. So what's the takeaway here?
Well,
Go the index.
The Australian Dividend Darlings have done much better than the US Dividend Aristocrats. So that's a starting point. But I think it's just a good
over different time.
over different time period.
Yeah.
But this Dividend Aristocrats ETF I'm looking at listed in 2013.
Okay.
So I'll even give them the extra year because they're 141%,
Okay.
not per year, but
Yeah,
over the 10 years.
total, yeah.
So
yeah.
we've kicked their ass.
Yeah. Nice.
But I think, unsurprisingly, a factor that is a positive indicator for stocks is a company that is consistently raising their dividend. And this just is testament to that.
I have a slightly controversial opinion.
Hit me.
Some of them do it to have the bragging rights.
Definitely. And
Yeah.
to get into the Equity Mates Dividend Darlings ETF coming to market 2025.
Like, do you want a company that you're invested in to consistently raise dividends for the sake of it?
Cut the last 3 words of that, or the last 5 words of that. Do you want a company that you're
That's not my
invested in
point,
to
though.
consistently raise dividends?
That's not my point,
Yes.
though. For the sake of it.
it?
Yes, for a PR stunt. And I'm not naming which companies are in there that I think are doing it for a PR stunt, but I think there would be a bit of pressure on some of them because they do pride themselves on it.
Yeah, I think that's certainly a factor. I think especially in the US, if you're a CEO of a company in the Dividend Aristocrat Index and you've had 25 plus years of dividend growth, you wouldn't want to be the CEO that cuts it.
No.
But like, it's interesting. I'll include just the link to the Wikipedia page in the show notes because it has a list of all the 67 companies. There's some really well-known ones. But it also has a history of how companies fell out.
Okay.
And, it's obviously like around 2020 and 2008, like when the market crashes and companies get in trouble, that's when you see a lot more companies having to make that hard decision to cut their dividend. But yeah, some big companies were in it and went through some tough times and got the flick.
Well, there you go. The ASX Dividend Darlings.
No, ASX Dividend Darlings.
Yeah, loved it.